Hello, everyone. So let us now continue with the discussion of the audit and assurance, the revision sessions that we are having. So we have already discussed a part of the topics in the previous session, where we have picked upon the topic of risk, planning, and evidence. As I told you, the structure in which the revision will happen is going to be a little different. It is not going to be in the sequence which is available in the study text. So the way we have covered the syllabus when we were studying the subject together, the way in which we have taken the topics one after the other, that is not going to be the approach for the revision purpose. And that is the reason I properly segregated and sequenced it in a different manner so that the revision becomes a little easy and understandable. Okay. And with this plan, we have already covered the first set of our topics, which was regarding risk assessment and planning, where we spoke about 3 different chapters. Okay. Chapter 5, 6, and 7 from the study text, which spoke about risk. Second, regarding planning. And third, we spoke about audit evidence. All right. So with the same approach, we are now going to continue with the next set of topics, which are basically talking only about internal controls. So when you look at the study text, internal controls properly has been covered by 2 different chapters. One is the systems and control, and second is internal audit. So keeping that in mind, today we are going to discuss everything regarding the internal control system. So all the aspects in the audit, a syllabus which is talking about internal control, internal auditor, everything we take up together in one single go. Okay. So let us pick up, okay, from the chapters from the study text, which are talking about internal control. Okay. So as already discussed yesterday, I told you the way in which I've segregated the topics are different. Okay, so we are going to pick up the C1, that is internal control, where we are going to talk about 2 things, systems and control and internal audit. Okay, now the question paper pattern we have already discussed, and the sequence of revision, if you can see, yesterday we already covered the first part of it, that is planning and risk assessment. Today we move on to the next one, that is regarding internal controls. Okay, so yesterday's topics are all completed by us. So let us directly move on to the topic of internal control. Okay. So as I told you, internal control, 2 chapters are covered from the study text. One is systems and control, and second is internal audit. Okay. If you look at the study text chapter numbers, it is chapter 8 and 9, which we have discussed as a part of the syllabus when we were talking about. Okay. So systems and control is the first one. And then second, we have the internal audit. Okay. Now, so it is chapter 8 and chapter 9 of the study text. Okay. So let us begin first with the systems and control. Today, the way in which we are going to continue the entire revision is that few parts of it I'm going to discuss directly from the content that I have, the concepts which I've picked up from the topic, each and every concept. But there are some parts of it for which we are going to refer the study text. And from there, we are going to have a little bit of reading. Reason being, those particular parts, you cannot go only summarized manner. You actually have to go back to the topic again and understand it much more in detail. Okay. Also, there are some places where examination approach has been discussed in the study text. So that also will be helping you in remembering those concepts again. Okay. So let us continue with systems and control. So first concept is with regard to the effect of controls on audit. Okay. Now, this we have already discussed in the previous session where we spoke about risk. There, one of the components of the audit risk was regarding control risk. Okay. And in the control risk, we understood that as the auditor is going to do the risk assessment, he's going to look for inherent risk, control risk, and also the detection risk. And obviously here, control risk, okay, why he checks to understand or why he checks the control is to ensure whether control risk is there or not there. And what is control risk? Control risk means whether the management has put proper controls in place. And if the controls are in place, are they operating and are they effectively operating throughout the year? So all of that together will give the understanding to the auditor whether controls are operating or not. Based on that, he'll be able to assess whether the control risk is high or whether the control risk is low. Now, why do we talk about controls with respect to audit? Now, we check the controls only because we need to understand the risk of material misstatement which is present. If suppose the control risk is high, that means the risk of material misstatement is high, because of which the substantive procedures which has to be adopted by the auditor will be more. And he is not going to rely on the internal controls, the internal evidences, he is not going to rely upon them. And he will try of checking more of external evidences. He will try to get more of independent resources outside the entity. From there, he is going to obtain the evidences. Okay. Similarly, if we say the control risk is low, that means the controls are good. Then in that case, we can have a reliability placed on the internal control, whereas substantive checking could be a little less. That is, the quantity of the detailed checking that we are going to do could be less. The sample size would be less. Got it? So that is the effect of the controls on audit. So as a part of audit, we do check the internal controls to understand how the further audit procedures could be applied. Okay, then. Second part we have already taken yesterday. Okay, that is the previous session where we spoke about the audit risk, where one of the risk was control risk. And what is control risk? Either the control is not present only, or if the control has been implemented, that is designed and implemented, it is not operating as required. In both the case, we say what control risk is present. Okay, now, once the auditor evaluates the control risk, either he will end up saying control risk is low or the control risk is high. Now, if the control risk is low, what is the meaning of this? If the control risk is low, means controls are good. Controls are good, or they're operating. Okay. In that case, now substantive procedures, the further audit procedures of the auditor would be less, because now we are having a confidence that the controls in the organizations are working good. So based on that, the substantive procedures would be less. Correct. But if I say control risk is high, the meaning of that is controls are either missing or the controls are not operating. So in that case, the part of the auditor's work will be more. He has to check more of the details. That means substantive procedures will be more. He has to check more of the transaction. Sample size will be more. On internal controls, he'll not be able to place the reliance. So basically, there are going to be a lot of problems associated with the control risk, because when the control risk is high, we believe there is going to be risk of material misstatement. And when the auditor identifies risk of material misstatement to be high, then substantive checking also will be heavy. Correct? So when I say control risk is low, meaning is risk of material misstatement is also low. When I say control risk is high, risk of material misstatement is also high. Now, let us understand what will happen if the control risk assessed by the auditor is low. So in that case, the auditor will place more reliance on internal controls. That means you can trust on the management's control system and you could believe, yeah, controls are operating properly. So your belief that the risk of material misstatement could be lower. Understand, we cannot say the risk of material misstatement is not there only. Controls also have inherent limitation. So controls also only can reduce the risk of misstatement. They cannot eliminate the risk. Okay. Why? We'll study after some time. Okay. So on internal control, you can place reliance. Then the quantity of the detailed checking will be reduced. I told you the sample size will come down. The detailed checking also will come down, because controls are operating well. So the sample size that you're going to select is going to be less. So there will be a reduction in the quantity of the detailed substantive checking. Then understand, when you begin the audit, you do the planning. Okay. Planning will be done based on the preliminary assessment of the auditor. So based on some kind of observation, some kind of understanding of the entity, he will decide whether controls are there or controls are operating or not. But then when you actually perform the test of controls, that time you'll understand whether controls are really reliable or not. So obviously, once you do the control checking, that will be the position where you'll be able to decide whether control risk is high or control risk is low. So in that case, you have to modify the audit strategy and plan with updated fewer substantive procedures. So whatever you planned earlier, now you'll be able to decide and take up an action where you'll be able to check few things only. Why? Because now we believe controls are good. So if your audit strategy initially believed that more of checking has to be done, so now what you can do, fewer checking can be done. Okay. So this is all when we come to a conclusion that the control risk is what? Low. So you'll be able to place reliance on the internal control. The quantity of the substantive checking will be reduced, and the audit strategy and the plan that you have originally drafted, that will be updated to perform fewer procedures now, because controls are good. We can trust on the internal control. See, when you trust on the internal control, meaning is whatever data has been made by the management, it is reliable. Okay. Then if I say control risk is high, that means controls are not operating properly. So in that case, what you'll do? Increase the volume of procedures, more of procedures you will adopt. Okay. You will do recalculation, you'll do more of inquiry, you'll do reperformance of certain procedures. You could also obtain external confirmation. So more and more of procedures you'll start adopting. Then more of substantive procedures to be performed, all of the same examples again. Now the location. So when you decided the scope, maybe if there are 10 branches, you have decided 2 or 3 branches to go and check. But now you decided because the control is not present, the controls are not operating properly. So what you decide? No, now the number of locations that we have to check should be increased. So the scope will be increased now. You will check more number of transactions. You will check more number of locations. Okay, so your scope will now be enhanced. More of checking you will be doing. Now, analytical procedures, can you trust on it? No. Why? Analytical procedure is what you are going to develop some kind of relationship between data. Correct? So you'll have a relationship creation of the data. Now, when internal control only is not good, the data that is available, will it be reliable? The answer is no. So if the very data only is not reliable, then how are you going to perform the analytical procedures? The analytical procedures will not be reliable because analytical procedures will be based on the data. And if this data only is not reliable because internal control is not good, analytical procedure also you cannot place reliance upon. Correct? So analytical procedures cannot be used much. Written representation not reliable. Why? Controls are bad. That means management is not having proper controls in place. And written representation you get from home management. So can you rely on this internal source of evidence? The answer is no. Correct? Then obtain more evidences from external sources. When the internal control only is failed, obviously you'll have more reliance to be placed on external evidences. If you recollect the previous discussion that we have regarding evidence topic, when we spoke about the concept of reliability of the audit evidence, that we have spoken that external audit evidences will be more reliable than internal audit evidences. And internal audit evidences will be reliable only if the internal controls are good. But now we are saying control risk is high. That means controls are not operating. And if controls are not operating, that means internal controls are not good. So will you rely on the internal evidences? No. So you require more of external sources to provide you the evidence. Correct? Then again here, when you can just connect to the previous discussion, in the previous discussion, we updated the audit strategy and plan to have few audit procedures because controls were good. Now the controls are identified to be bad. So you require more of the procedures to be performed. So here you'll do opposite. You will update the strategy and the plan to add more testing as required in the final audit stage. Okay. So this is regarding what? The control. So why we check the controls in order to decide the further audit procedure. What is control risk? To check whether controls are operating or not, whether they are present or not. After assessment, you'll be able to conclude whether control risk is low. That means controls are good. And if controls are not operating properly, we say control risk is high. Based on that, you'll be able to decide how you will move forward with the audit. Based on that, you will update the audit strategy and the plan accordingly. All right, then. Now I told you, just some time back, I told you that the auditor is going to check the internal controls in order to decide how much reliance to be placed on it. And based on that, he's going to design his substantive procedures. Understand internal controls, even if they are good, even if internal controls are good, if that is the conclusion of the auditor, understand internal controls can never give 100% assurance that there is not going to be a risk of material misstatement. Absolute assurance cannot be given. The logic behind it is very easy. The logic behind it is, see, internal controls are designed by the management. Internal controls are implemented by the management. But ultimately tell me the implementation, okay? Implementation, the actual performance or actually internal control should be adhered by whom? The people inside the organization. And what guarantee the human resource, that is the employees of the organization, are actually going to follow these policies made by the organization appropriately? First of all, they are human beings, so human errors are obvious. Sometimes management designs the control, but they are ineffective. Sometimes these employees will form a circle. They will have a collusion among themselves. Like, for example, there could be 3 friends in one department only. So what happens when there is a segregation of duty happening between 3 different friends? One has to check the work of other. Tell me their friendship is going to override the control, because they will form a group where we'll say, look, what I do, you don't intimate to the seniors. What you do, I will not tell it. So basically, though the controls are implemented, even then there'll be a failure because these are now friends. There has been a collusion. They have joined hands with each other. So control will fail. Abuse of power. Now tell me, who is designing the control? Management. So don't you think management will have all the control to even abuse the power? They can bring in false information. They can have false journal entries. They can add some additional matters which never happened only. So that when the control is with them, they will abuse the power also to falsify the data very easily. And finally, what controls are there in place? What management is going to decide? Now, suppose a particular area is overlooked by the management. They don't realize that there is a risk present in that particular area. So what is going to be? Control is going to be there? No. So when the risk only was not assessed, when inherent risk only the management could not find out, how are they going to understand whether controls have to be designed or not? Or what if suppose the management says, no, so there is a risky area, but if suppose we put the controls are going to be very costly. That means the benefit that you're going to derive out of the control is less than the cost employed. So in this case, the management will decide, though risk is there, we will not adopt the control. Got it? So in that case, what is happening? It is management's judgment on the nature and extent of the control it chooses to implement. So though the risk is identified, if the management does the cost benefit analysis and the management believes the cost is more than the benefit, in that case, what the management will do? The management says, no, this control will not implement. We will handle the risk in other way. So in this case, there is a failure. Why? Because management judgment was not to implement. Got it? So these are all the limitations that we have with respect to controls. So what are the limitations? First, human error. Obviously, it is going to be there. Second, ineffective control. In a particular area, controls have been put, but they are not enough to eliminate the risk. Collusion among the staff, where the staff actually develop friendship. Abuse of power, where the management which is having the control will misappropriate or maybe misuse or take the undue advantage of the power that they have. Ultimately, it is management who is going to decide whether to implement the control or not. So if the management believes the cost is more, benefit is less, they might not implement the control only. So in all these cases, what we are saying, these are limitations. So because of which controls will never give an absolute assurance, the risk of material misstatement will not be there. All the risk have been eliminated, all the risk have been prevented. That can never happen. Why? Because these kind of limitations are always going to be present. Okay. So these are the limitations of internal control. Now we do a very, very important discussion, and that is with regard to components of internal control. Okay. Now, components of internal control is studied as per ISA 315. In the previous discussion, where we spoke about the topic of risk assessment, then I introduced you to a topic called as ISA 315, which talks about identifying and assessing risk of material misstatement. Now, risk of material misstatement is nothing but inherent risk and control risk. Correct? Now, to understand the inherent risk, we understand the entity. And to understand the control risk, we have to understand the internal control system. Correct? So basically, to understand the risk of material misstatement, you need to evaluate the controls. And these controls are made up of components. So there are 5 different components to internal control. And when the auditor is going to do the assessment of controls, he will look into all these components. If all these components are very well operated, very well present, then only we say control risk is less. That means controls are operating effectively. Okay. Now, for the auditor's judgment, what is going to be the components of the internal control? Now, there are 5 components to the internal control. Okay. What are the 5 components? First, it is control environment. Okay. Second, we talk about entities risk assessment procedure. Third, it talks about information system. Fourth, it talks about control activities. And fifth, you talk about monitoring. And obviously taking remedial actions. So now, always the auditor is going to look into these 5 components, whether they are present or not. If these 5 components are present in a particular organization, only then we say the control risk is low. Otherwise, we always conclude that the control risk is high. For this, first you have to check with the control environment. What do you mean by control environment? Very simple. We know that it is the management which is going to design, implement the internal control system. So don't you think there has to be such a corporate governance, such kind of management's functions should be there, or the integrity, the attitude of the management should be such that they are actually having integrity and they're operating in the ethical value. So they will be actually fostering an atmosphere in the organization where people understand the importance of integrity, understand the importance of the ethical values. The code of ethics have to be followed properly by them. Because understand, if the control environment is good, only then controls will work. However good your internal controls are, however well the management has designed it, if the implementation, the control environment only is not good, then the control failure will be there. So suppose if the management has designed a very good internal control, but the management has not made the employees of the organization, the people in the organization, understand the importance of ethics, importance of integrity, bring in the attitude or the kind of behavior in them which is giving importance to, integrity, ethical values and all that. Then in that case, if such kind of atmosphere is not present, if such kind of environment is not there in the organization, the governance is not like that, then in that case, however good your control is, it is going to be a failure. Correct? So first thing, we look into the control environment, whether the management has fostered such kind of environment where integrity, ethical values, employees value, the proper values have been, actually conferred or communicated to the entire organization, and the organization actually understands the importance of ethical conduct and all of that. If the control environment is good, that means the controls could work. Correct? So first component is the control environment. Second, the auditor has to ensure whether management has a good risk assessment policy. That means, obviously, what is the meaning of internal control? That means there should be certain policies which are designed for the purpose of either preventing the risk, and if you're not able to prevent, it should be such that it is detecting and able to correct it immediately. Correct? So that is the kind of internal controls you should have in place. Correct? Now, auditor will ensure that whether the management has good risk assessment policy. Risk assessment policy means whether the management has certain policies in place where they're able to identify the potential business risk, such risks which are going to have the impact on the financial statements, financial reporting. So you should see whether there is a proper team in the organization, the work of which is to identify the potential risk. They should be able to identify the competitors. They should be able to identify what risk is present in the market, okay, with which they'll be able to take the remedial action. So this is what entity should have a risk assessment process available. If the risk assessment processes, the procedure is there, if you have a team like that in the organization whose work is to assess the risk and take the responsive measures, then in that case, we say, yeah, this particular entity has good internal control. Okay. So the second component is what? Entity's risk assessment process. It is not auditor's risk assessment. Entity as a part of their internal control component, they should have a separate team altogether, separate unit designed altogether, whose work is to identify the potential risk. And based on that, they have to assess the significance of that risk, and they should be able to address the risk. Address means they should be able to design control to avoid that risk. Okay. Then information system. This information system, the auditor will check with respect to those which are having impact on the financial reporting. It could be computerized, manual, everything. So that kind of information system that we talk about. After understanding all the three, we will then see what are the control activities. Control activities means what has to be done, what should not be done. Like, for example, segregation of duties between two people. Okay, work done by one should automatically be checked by another. Okay, there should be some kind of controls placed at every area. Okay, so those are called as control activities. That means to attain the objective, there'll be some controls in place. What is to be done and what not to be done to achieve the control objective. Like authorization is one of the example. So authorization is one of the activity which the management will put in place so that whenever there are some, bigger sanctions, or when there are higher amount of purchases to be done, one single person in the organization cannot take the decision. He requires authorization coming from the senior level. So this authorization is also a control, correct? Then monitoring. Now, however good all these things are operating, ultimately you should have monitoring process. Continuously, the management has to have a process where you are monitoring whether actually the controls designed have been implemented. And suppose wherever you believe there is a deficiency in the control, immediate remedial actions have to be taken, correct? So these are all the components of the internal control which the auditor will evaluate. That means first he will look into the control environment. That is whether the environment where the controls are put in, whether they are able to understand the controls and implement the controls in the desired manner. They understand the importance of behaving in the right direction. Entity, whether it has a proper system to analyze the forthcoming risk. Okay. And are they able to decide significance of the risk and to respond appropriately? Then information system, which has been used by the entity where all the initiation, recording of the entries is happening, where controls have to be implemented. Then controls activity, finally, what are the activities where the proper authorization is there, where the proper segregation of duty is there, correct? Then monitoring. That means whether you have a team or whether the management is having a proper procedure in place to ensure that all of these systems, okay, have been properly monitored or not. And if suppose anywhere there is a lack of effectiveness or the controls have failed, whether they are able to take remedial actions immediately or not. Okay, so that is the discussion we have with regard to components of the internal control. Okay, then moving forward, we have the next part of the discussion, which talks about direct control and indirect control, a very important discussion. In the client's location, auditor will come across two types of controls. One control will be direct, some controls will be indirect. What do you mean by direct control and what do you mean by indirect control? Direct control is something that gives a direct evidence for what? Assertion. It is directly having a control over a particular assertion. To give a simple example, suppose you talk about salary, payroll. Okay. Suppose you are correlating a particular amount with that of the payslip. Okay. So a particular amount appearing in the bank transactions, okay, an amount paid, and the payslip if you're cross-verifying, okay, then in that case, you will be able to decide whether the amount is accurate or not. And accuracy is an assertion. Now, this particular payroll, okay, and this particular cross-verification or the authorization of the payment and all, this particular control is directly going to impact on the assertion. That is accuracy. So double check will be done. Authorization will be there. Okay, in order to check whether particular assertion is properly validated or not. Okay, it talks about accuracy. There has to be double check on the payment, double check on the amount. So whenever records are prepared by the functional level manager, it is again reviewed by the top level manager, only because the amounts have to be correctly recorded. Now this particular control is directly affecting the assertion accuracy. But sometimes you have indirect controls. Indirect controls could be like monthly reviews are happening. Okay, so month on month, the total payroll calculation is done and a top manager is going to review. Now, this is what total checking has been done. This is done only to ensure that at the end, the amount has correctly been paid. There has not been overstatement, understatement. So indirectly, the accuracy is going to be checked. Okay, so one are going to be direct controls. Some are going to be indirect controls. So auditor will be responsible to check all the types. Okay, so whichever comes during the course of his audit, if there are direct controls which are impacting the assertion directly, those also, some which do not impact the assertion directly, but indirectly they're connected with the assertion. Okay, those are considered to be indirect control. Okay, then authorization is one of the examples for indirect control. Authorization is what? It is just to ensure double check is happening. Why? Indirectly to ensure at the end, completeness is there, accuracy is maintained, all of that. Okay, so we have indirect controls also. Then moving on, next one we have we have IT controls. Now today we live in an IT environment. Today every business is working where? In an IT structure. Information technology, the architecture, the structure, the entire infrastructure is information technology only. So we live in a computerized, digitalized environment. So today controls are also IT controls. Correct? Now, very simple controls could be general IT controls where you will see in a regular environment where not every person will get access to all the data. They'll be provided with the username. They'll be provided with the password. So these are nothing but what controls for getting access to a particular data. So you're trying to maintain the confidentiality, the security of the data by providing this kind of security details. Okay, or access controls will be given. Or maybe the change in the programs, new softwares to be bought in. Not every person in the organization will have the power. So that is also what? One kind of control, where every person will not be allowed to do some kind of modification to the systems and the controls. Correct? Similarly, IT operation, the management of that will be given to certain officials only. Authorization will be there. So these are called as the IT controls, okay, which are available in the IT environment. You have general IT controls. Basically, we have access controls. I told username, password. Program changes, not every person. These are basically senior officers only will have the control. Process to manage the IT operations. Okay, so there'll be like job scheduling, okay, job rotations, all of that. Okay, so batch processing, these are all process. Okay, process controls are also put. Okay, then information processing control. Okay, you'll have batch totals, the batch total check. Okay, whenever you do any software you're using, you will see that if there is an error and the batch does not match, okay, that is inventory purchases, these are all interconnected. So one total, if it is going wrong, automatically error is shown in others also. So these are also what controls put in place. So they are batch total controls. Then you have sequence check. Okay, then arithmetical check, range check, existence check, etc. So these are all the controls available in the IT environment. Some are general IT controls and some are information processing control. Okay, then. Now this becomes a very important part of discussion as a part of this particular topic. Okay, internal controls. Now, We as auditors, we are required to document the client's system of internal control. Okay. Now, client is going to have internal controls. We are required to review it, agreed. But then we have studied ISC 230, where we understand whatever we do as a part of audit, compulsory, we need to document it. Similarly, when we understand the entity's internal control system, we need to document the internal controls. So for that, we have the tools available for the purpose of documenting. So what are the tools available? You have narrative records, you have flowcharts, you have questionnaires, and you have organization chart. Okay. So you have the narrative records, you have flowcharts, questionnaires, and the organization chart. Now, narrative records is where the auditor actually goes in for detailed checking of the internal controls, and he makes records based on what he has understood. A descriptive record will be made, whether this control is present or not, whether payrolls have been properly, recorded or not, whether purchases have been sequentially invoiced or not, okay, whether sales invoices are properly numbered or not, are they pre-numbered, okay, is there a proper authorization? So everything will be descriptive manner will be recorded. Flowchart is whatever you understand, like for example, about the purchase system, whatever internal control is present, about that you give a diagrammatic presentation. That is called as a flowchart, a little difficult to make, but when you have it ready, it is very easy to understand where there is a deficiency and where there is a no deficiency in the control. Then comes to questionnaire. Questionnaire is most important, and actually when you talk about the real scenarios, one of the common places or one of the common ways through which you will document about the internal control of the client is that you will make a questionnaire. So it is called as the ICQ, a detailed questionnaire will be prepared. And you have one more which is called as ICEQ, okay, which we'll be taking up now through the study text. I'll take you through. Okay. So what is going to be a difference here? We'll understand. First of all, what is the questionnaire? You will pick up all the questions pertaining to the internal control. Okay. That means whether this control is there, that control is not, is it present or not, whether purchases are pre-numbered, okay, whether GRN have been issued or not, whether good dispatch notes will be given or not. Okay. All of these. Okay, are tenders invited before we place the purchase orders? So like that, questions will be given where the answers will be yes, no, or not applicable. Based on that, the client will be required to give an answer, whether it is yes, no, or not applicable. Okay. Why not applicable? Because usually the audit firms will have a common questionnaire for the clients. So they will give this kind of a questionnaire where for every client, obviously all questions will not be relevant. Okay. So based on that, the client is required to fill in whether yes, no, not applicable. Whereas ICEQ is a little different, where you will not tell about the kind of control you're questioning. Rather, you will ask them, for this particular objective, do you have a control? Like, for example, how do you, what control is in place to ensure that the debts do not turn to be irrecoverable? Okay. So in that case, you don't tell them whether this control is present or not. You give them a situation and they have to tell based on the situation, what kind of control is available. Okay. So here the basic difference between these two is that here you give the name of the control or the type of the control and you ask whether it is present or not. In ICEQ, what you do is you don't give the type of control, you give the control objective. And they are required to tell based on the objective what kind of control is present there. Okay. Now, obviously, when you look at it, you'll understand this is more relevant. Because here it could be possible that the client could reply in hurry and anything they could mark yes, anything they could mark no, or basically to show their controls to be strong, they could go on marking everything yes, 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 even if the control is not present. But in ICEQ, the question is, what control do you have in place? So you actually have to tell what control is present. This you'll be able to understand only when you know there is a control like that. So basically, the more relevant one will be ICEQ. Okay. Then organization's chart is nothing but similar to that of the flowcharts. But here the chart is going to talk about the reporting responsibility. Who will report to whom? It is going to go in a sequence one after the other. All right. So that is called as the organization chart. Okay. Now. So now let us go to the study text. We'll have one look at the study text, and based on that, we'll try and understand how the content is given, because it becomes an important part for a discussion, exam point of view. Okay. So here we have from the study text, the documenting of the client system. I told you narrative records are going to be written description completely of the system. Flowchart is diagrammatical representation. Questionnaire, look at this. Internal control questionnaire, internal control evaluation questionnaire. So there are two types of questionnaires which can be used. So it's a list of questions in relation to the client's control system. So two types are ICQ and ICEQ. As I told you, in ICQ, you will talk about the control and the question will be yes, no. The question will be drafted in such a manner where yes is giving a positive sign, no means deficiency. Correct? And ICEQ will not give the control. It will give the control objective. And you have to tell, based on that objective, do you have a control in place or not? Okay, just for you to get a clear understanding, we'll pick up 2-3 examples here so that you understand what will be the difference in the wordings. ICQ wording will be, does a supervisor authorize all weekly timesheets? So the answer will be yes, no. So if you say yes, okay, if it's authorizing all the weekly timesheets, it's a good control. If no, deficiency. But look at ICEQ. How does the company ensure that only hours worked are recorded on timesheet? So here you have not given what kind of control we require. You are telling this is the misstatement or this is a risk. For this risk to mitigate, what control do you have in place? So that is ICEQ. So you have ICQ where control system is given to you, where you have to answer whether it's present or not. ICEQ, you have to tell whether the control objective will be given, and based on that, you have to tell whether what kind of control is available. One more example we can take. Does the company perform a regular credit check, okay, on the customers in order to ensure irrecoverable debts are not there? So whether yes, no, or not applicable. Not applicable won't come. Every business will have customers. But when you look at ICEQ, how does the company try to minimize the risk of irrecoverable debts? Same answer, but the way of questioning is different. This is more reliable because here the client could reply yes without even checking and giving an answer to the auditor. Yeah, we have this control. But here you'll be able to give an answer only if you know about the control or you understand what kind of control is required. So this would be more relevant. Okay, so that is the difference basically between ICQ and ICEQ, evaluation questionnaire and a regular questionnaire. Okay, so let us get back to the same discussion that we had earlier now. So we covered with narrative records, flowcharts, questionnaire, organizational chart, and you also understood the difference between ICQ and ICEQ. Okay, now let us take it further. Testing the system. Now, how will the auditor test the system? Very simple. He can observe. He can do inspection of documents. He can use some kind of test data to ensure controls are operating. So sometimes we can enter dummy data, and then we can see whether processing is happening appropriately and what we expected as the final result, really that is happening or not. Okay. So for example, you have an inventory, the balance appearing to be 10,000 units. So try to give a sales entry of 20,000 units. So if the control is really operating properly, then it should not be accepting this kind of order. Because when the inventory is having a balance of only 10,000 units, how can the company take an order of 20,000? So basically, if you do test data checking to ensure control is operating or not, some kind of dummy data you can enter into the system and check whether actually controls are in operation or not. So observation could be, document checking could be, and also you could have some kind of dummy checking, that is test data you can apply. Okay, then. Now we have a very, very important discussion, very important, where we get introduced to ISA 265. Okay. Now ISA 265 talks about communication of deficiencies in the internal control system to those charged with governance. That is to TCWG and management. So what is it talking about? ISA 265 says communication of deficiencies in the internal control to the management and TCWG. Okay. Now, before we go on to the reading and understanding a little bit more, I will just help you with some things. Okay. Now, first of all, a very important point for you to know is, as a part of the duty of the auditor, it is very, very important that he actually goes in for checking of the internal controls. Okay. So the auditor is going to check the internal control system. When the auditor checks the internal control system, okay, he is going to check, obviously this controls also will happen on sample basis only. All the controls we cannot check. So we will check few of the controls. When the auditor checks controls, there could be a possibility. There could be some controls which are not operating, or some areas there are no controls only. So if the control is not present, or if the control is present, but it is not operating, both of this, we consider it to be what? Deficiency. So what is the meaning of the word deficiency? Either control is missing or control is designed, but it is not operating. Both of this in the auditing terminology, we call it to be deficiency in the internal control. Now, there could be a possibility that the auditor, while doing the audit, while checking the controls, he has identified deficiencies in the internal control. Deficiencies in internal control. Out of these deficiencies, the auditor has to then segregate which are significant deficiencies and which are not very significant. Obviously, all the controls operation will not be that significant. We as the auditors will be concerned with only those deficiencies which are going to definitely impact the financial statement materially. So if the misstatement is such that the likelihood of that would be a reason for risk of material misstatement, or maybe a control, okay, is missing where volume of transaction is really large. Like for example, purchase and sales controls are not operating properly. Okay. Or maybe in particular area, the control has to be there, but it is not there only. Correct. So basically, depending upon certain factors, we as the auditors have to decide whether a particular control is significant or not. That is, control element which is missing, is it significant or not? Out of these significant deficiencies, you will then go and intimate to the management and TCWG. Okay. Now, you will intimate to the management and TCWG in the form of management letter. In the form of management letter. Here in this management letter, you will first give the description of the deficiency. What is the deficiency? Second, tell what will be the consequence of this particular deficiency. What will happen if the deficiency is going to be there, where it will impact. And finally, you have to give recommendation about how you have to mitigate or how you have to put the control or how you can actually prevent this kind of problem. Understanding? So what we have understood, auditor will check the internal controls on sample basis, and then there would be certain deficiencies identified by the auditor. All the deficiencies we don't communicate to the management and TCWG. Out of the deficiencies, we pick up only the significant deficiencies, and that we are going to communicate to the management and TCWG in the form of management letter. Okay. Now, in the management letter, you have to first give the description of the deficiency. Second, what will happen if this control is missing or if the deficiency is there? What will be impacted? And finally, you as the auditor, you simply cannot give the problem. You also have to give a solution. So you have to tell what would be the recommendatory measures, okay, to be taken up in this particular case. All right. This management representation that you're going to give it to the TCWG and all, the letter which you're going to submit, okay, the auditor, what letter he submits to the TCWG, this has to be kept confidential by the management, and it is only for the purpose of communicating to the management. It cannot be disclosed to the third party. It cannot be used anywhere else by the management for any other purpose without the permission of the auditor. So this is solely given only for the purpose to inform about the deficiencies to whom the management. There is no other reason where the management can use this particular letter issued by the auditor. Okay. So this is covered entirely by ISA 265. Okay. Wherein you talk about significant deficiencies to be informed in the form of the representation letter. And this letter should include three things: description, consequences, and recommendation. And it has to be handed over to the management. Clear? And you inform only what? Significant deficiencies and not all of them. Okay. Okay. Now let us go to the study text and understand what is given there. There is some important element here which you have to take up as a part of your exam point of view. And that is the only reason I'm sharing the study text here. Okay, the main material, because there are some points discussed here which becomes very important for exam point of view. Okay. Now, they have told that whenever the question comes on identifying the deficiency and communicating this with TCWG and the management as per ISA 265, the exam approach will be like this. Okay, this is important discussion. The exam is likely to include one or both of the following requirement: identify and explain the control deficiency from the scenario and provide recommendation to overcome the deficiency. So first kind of question that you can expect in the examination is they will give you a situation where you have to find out what is the control deficiency. Okay. Second, it will be a possibility that they're going to ask you regarding what will be the recommendation that you will give if there is a deficiency. Okay. Second, the question will be regarding identify direct controls and identify the test of controls that the auditor is going to perform in order to analyze whether the controls are operating effectively or not. So once you understand there is a direct control, you have to perform control testing and check whether control is operating or not. So how will you check? So two types of questions can appear with respect to control checking. This I will take through when I take a question from the examination kit, and we'll be understanding how this question has to be answered. But basically my discussion as of now is with respect to this part. Usually the students do not get a proper approach of how this kind of question has to be addressed. When they are asking you regarding a control deficiency, there is a way in which you have to give the answer. You don't have to replicate the question as it is. You actually have to point out what is the deficiency. You have to tell what will happen because of the deficiency. And then you have to tell what should be the recommendatory measures, okay, by the auditor given to the management to overcome this kind of deficiency. Okay. Just to give a proper understanding again, they have given you a control deficiency here. Identification of deficiency is usually quite straightforward. So questions will be simple here. You'll be able to pick up very easily. You should look into the information which indicates controls are missing. Example, sales orders are not sequentially numbers. Now tell me in the exam, you get a scenario like this where they're telling sales orders are not sequentially numbered. Now, in this case, when you know this particular question, this particular sentence is given, the understanding will be that if they're not sequentially numbered, that means one of the control is missing. And what is the control missing? Sales are not serially numbered. That means there could be some kind of tampering. There could be, some additional information. There could be overstatement, everything, correct? So now in the answer, you have to give what is the kind of deficiency, what will happen if this kind of deficiency is not corrected, and then you have to give the recommendation as per your part. That means you as the auditor, how will you overcome the deficiency? Now, the best part here is that they have given you 3 ways in which you have to give the answer. They have told you what could be the poor answer, that is, this is not is to be written. A better answer, a better accepted when compared to poor answer, but good answer is what is expected in the exam. Okay, so how you have to write it? First, look at the way poor answer is given. Sales orders are not sequentially numbered. Now, you just replicated the question. You simply copied and pasted. Is that going to tell the deficiency? No. You are simply telling what is missing. So that is not the way you give the answer. And you're giving the remedial measure what? Order should be sequentially numbered. Not the correct one, because see, first of all, you don't explain the deficiency. You have not even told what will happen if this is not sequentially numbered. And recommendation also is not very clear. Correct? What will be the better answer? Sales orders are not sequentially numbered. This is the deficiency. Order will be difficult to trace and orders may not be fulfilled. Deficiency is still not fully explained. Understand, you have only given a starting point of it, which is correct. But because of that, what could happen, you have not told. So even this is only a little bit acceptable, but not a complete answer. But look at the good answer. In good answer, I told you, you explain the deficiency, tell the consequences, and then also give what? Remedial measures. Okay, so if you look at it now, a better answer would be sales orders are not sequentially numbered is the deficiency appropriately picked up. Second, because of this, what will happen? Sales orders may not be completely recorded, resulting in unfulfilled orders. Orders received but not recorded will be difficult to trace. Customer will be dissatisfied if the orders are not fulfilled, resulting in complaint and future losses. So did you explain the consequences also properly? Yes. Finally, okay, here recommendatory measures, maybe they have not questioned. They have not asked you for the recommendation to be given. So here they're telling that if you look at it, recommendatory measures, orders should be sequentially numbered as first recommendation we are giving. Second, sequence check should be performed and any breaks in the sequence investigated and resolved. Meaning is, sequence check means what? See whether all are properly numbered, 1, 2, 3, 4 and all. If there's a break, if after 3 directly 7 is appearing, you know 4, 5 and 6 are missing. So this will help the understanding, you can investigate and get it resolved. Okay, so this is deficiency, this is the consequence, and this is the recommendation. This entirely will be the expected answer in the examination. So you highlighted the deficiency correctly. You told what will happen because of that, how will it impact the business, and finally to overcome, what should be done. First you sequentially number, and then you put a control where check that sequential check has been done, and if there is a break, it has to be investigated further. Clear? All right. So this is with respect to how you have to give the answer with respect to identifying control deficiencies and how you actually respond to the control deficiency. Okay, so let us go back to our main discussion. So we have done this entirely, that is ISA 265, where we understood about communicating the deficiencies that you identify with whom? The management and TCWG. All right, now remaining all are the different kinds of control systems that are available in the organization. So for sales at every level, you'll have controls, like when the order received, when the goods are dispatched, when invoice is sent, transaction is recorded in the books, and cash is received. Understand, all these functions are segregated. Different people are going to perform this. Got it? Here what will happen when different people are going to perform different procedures, then in that case, there is going to be control in place. Work done by one person will automatically get checked by another. And because of that, sales will be complete and accurate. Understanding? Similarly, purchase also, at every place you'll have controls. Payroll also, every place you will see that there is a control put in place so that final calculation, payments and recording will be correct. Inventory system also, proper recording will be there, proper dispatch, counting will be done correctly, because of which ultimately completion, no overstatement, no understatement, everything will be taken care of. And then you have the bank and cash system also, where you'll see controls are, first you look for request for payment, then payment authorization will be there. Okay, like when you talk about petty expenses in the organization, one person will raise the claim, other person is going to authorize the payment, then the payment is going to be happening, which will be recorded in the cash book, bank book, as the case may be. And based on that, you will see every place a different person is going to perform the functions. Based on that, what will happen? Work done by one person will automatically get checked by another. And basically, the controls will be considered to be strong. Understandable? So this is the basic discussion that we have had with respect to the entire systems of control. Okay, controls and systems that we talk. This topic, I believe it is really longer one, but trust me, the conceptual part of it is very easy. So once you have a good understanding from the entire subject discussion that we have done in the main course that is available, and then if you do the revision along with me, trust me, the concept will be completely clear. And here where I've picked up the concepts in detail again, you'll be able to understand things more clearly, because when we do the exhaustive coverage in the main classes, we have picked upon line by line every discussion. And then when you correlate with the revision, you'll be able to get 100% out of it. Okay, so this is it. Now, just for increasing your confidence and just for you to be able to understand what kind of questions we can expect in the exam. So I'll take one question from the exam kit of this topic, that is internal control, just for the sake of you getting introduced to the kind of scenario based questions that can come. So we will take MCQ kind of question, that is the section A, okay, where we have 5 questions, 2 marker each. So you'll have 10 mark question appearing. Okay, section A has 3 questions, right? So questions like that could appear in the examination in the first part. So it will be a full-fledged 10 mark question. So let us take it as a discussion and you'll understand how questions will be framed and how you are required to answer a question like that. Okay, so let us have a discussion with that. So let's pick one question from the exam kit and that will be a good coverage for you. So we will take it from the topic of internal controls. Yeah, so it's internal control. Let's read the question. It is 1st July 2015. You are an audit manager in Sandy and Company, and you are responsible for the audit of Coastal Company for the year ended 30th September. The internal control system in relation to purchase and payroll have recently been documented by the audit junior. So already the documentation has been happened. That is, audit junior has also already reviewed the control system. Okay, and on the purchases and payroll controls were there, for which he has documented properly. The test of controls have been performed to evaluate the effectiveness of the system. The audit junior has used narrative notes. So descriptive, exhaustive details of the system has been taken. An internal control questionnaire also has been used by him in order to document the system. You are reviewing the work performed by the audit junior before assessing the impact on the audit approach to be taken in respect of the purchases and payroll. So basically here the question is telling the audit junior, that is one of the junior staff, has gone to the client location, has done the checking of the control system by observation, inspection, and all of that. And he has understood that what is the kind of control existing, that he has done through the narrative records, that is he's inquired properly in detail and made notes out of it. And some part of it he has made question bank and which has been answered by the client. Based on that, he has documented the internal control system. Now, we are the senior managers. Now, senior managers have to decide how further audit procedure has to happen. So for this, you will go to the junior staff and tell, show the assessment. So now you have the document available with you where you are going to check how the assessment has been done. Correct? Okay, so based on that, now you'll decide your further audit procedure. So now you have the document in your hand and you're seeing what all is being documented by the junior audit junior, which all areas he has identified the deficiency, which all areas, what controls are present, what he has documented. So these are the following documentation that he has done. Okay, first, the first thing about the control that he has noticed is that goods are counted, okay, and agree to the supplier delivery note, okay, before signing the delivery note to accept the goods. So goods are counted and agreed with supplier delivery note. So when you count the goods for the receipt, do you check the purchase order for cross verification or supplier delivery? Obviously, according to me, you will check the purchase order, what purchase we placed and what we have received, that has to be cross-checked. In fact, you will not check what is, you don't count along with the delivery note. That is not what we are required. What order we placed and what we have received, that has to be cross-checked. So this is something directly we can understand is not correlating. Then the purchase invoice is matched to and filed with the related goods received notes and purchase order by the purchase ledger team in the finance department. So a very good control is present here. The purchase invoice is matched with the goods received note. So the goods received note and the purchase invoice, obviously you need to match them to understand number of goods and the condition of the goods have been properly reached the warehouse or not. Then payroll standing data files are sent to the department manager on monthly basis for review. Okay, a good control again. Hours worked are entered onto pre-printed payroll sheet by the wages clerk. Pre-printed means what? It is already available. The name of the employees are already given. And based on that, you are going to mark their payments. So here, obviously, it's a very good control because pre-printed means the name of the employees are already there. And the manager is going to now write about the amount paid to them. So here, what is getting eliminated? Fake employees, okay, or the employees which have left, their names will not come here because they are what? Pre-printed. And obviously, the payroll manager, if it is pre-printed, will take into account all the employees which have left and all. And based on that, the printing will be done. So again, a very good control. Fifth one, before payroll payments are made, the finance director will review the bank transfer list and signs to authorize the payments to be made. So bank transfer list, he is going to check it and he will sign to authorize the payment to be made. Again, it's a good control for ensuring proper payments to the correct employees. Okay, then. So here, as per the audit junior's notebook that he is maintaining, or the understanding that he's got about the counting of the goods, about purchase invoicing matching with the GRN, payroll is been verified on monthly basis, hours, and there's pre-printed payroll sheet. And then before payroll payments are made, director has been reviewing. Okay. Now, having understood about all of this, let us look at the question. First, state whether the following advantages and disadvantages relate to narrative records, internal control questionnaire, or both. Okay, advantages. Which are the two advantages that they're talking about here? Can be prepared in advance. So which can be prepared in advance? Obviously, narrative records cannot be prepared in advance because narrative records, as and when you go on checking the control, you go on writing it. But questionnaire, you will be having question paper ready. So the questions will be ready. So which can be prepared in advance? It is the internal control questionnaire, which is easy to understand. Narrative records also and internal control questionnaire also. Both are easy. So the answer will be both. Disadvantage, which may overstate the controls. See, narrative records, possibility of overstating is not there because what you identify, that only is what you write. But in the case of internal control questionnaire, it will be yes, no. Correct? So obviously the client will go on writing yes, yes, yes for most of the things because he wants to tell controls are good. So overstatement is possible where? In internal control questionnaire. Okay, then some controls may be missed, whether it is narrative notes or internal control questionnaire. In both the places, all the controls cannot be checked. Sampling will happen everywhere. So obviously some controls will get, missed out. So here the answer will be, can be prepared in advance, internal control questionnaire, easy to understand both. May overstate is internal control questionnaire. Some controls may be missed, both the places. Okay, so that is the answer. So this is a 2-mark MCQ. Okay, then next, let's take the next question. State whether the feature of the purchase and payroll system described as strength or deficiencies of the internal control system of postal company. Now this is simple. Purchase and payroll system. Okay, just without looking at the question also, if you try to recollect. First of all, the first thing that we read was the counting was done with respect to supplier note, supplier delivery note. This is wrong. You cannot do with the supplier because supplier delivery note is going to talk about what they have supplied only. That counting will not give an appropriate answer. The counting should match with what? The purchase order that you placed. So that is a deficiency. Then next, when you look, if you try to remember, or we can just have a reading also. Purchase invoices match with GRN. Okay, obviously goods received note and purchase invoice, if they are matched, then in that case, there will not be any kind of, mismatch with the counting, mismatch with completion of records will be there. So because of that, this is going to be a strength. Payroll standing data is sent to the department manager on monthly basis. Okay, so this is also a strength. And finally, are the pre-printed. So because they are pre-printed, dummy employees and all cannot be entered. So this is also a strength. Okay, so according to what information is available with the audit junior, okay, there are there's one deficiency and 3 are strength only. Okay, that is also a 2-marker question. Then you have the next one. Which of the following control objective is addressed by the feature number 5? So what is the feature number 5? First of all, before payroll payments are made, the finance director reviews the bank transfer list and signs to authorize the payment to be made. So just have an imagination that a bank transfer list is handed over to the finance manager, and then he looks at the transfer list. Okay, there are 10 employees to which payments have to be made. And then once he authorizes, the payment will be made to them. Okay, all right. So what will be the control objective? Let us look at the options available. To ensure payroll is classified correctly, no, because bank managers overviewing of, the list is not going to give any kind of understanding of classification of the payroll, no. To ensure only valid employees are paid, okay, this is correct, okay, because when this list is given to the finance manager, he was going to check in the list whether proper employees only are paid. So the answer will be B, to ensure only valid employees are paid. To ensure employees are paid for correct hours, how will he understand about the correct hours? Because correct hours, the availability will be the supervisor, and is there in the timesheet. Timesheet calculation, everything is done, and the list is forwarded to the finance manager. So finance manager will have the name of the employee and the payment to be made. So only has to check whether valid employees are paid or not. To ensure employee salaries have been calculated correctly, no. This is done by the supervisor based on the hours worked and all that. So the answer here will be to ensure only valid employees are paid. Then, you have reviewed the work of the audit junior and conducted that reliance can be placed on the internal control. Obviously, when you looked at the audit junior's work, out of the 5 things that he has written, 4 are talking about good internal control. So basically, as an overall conclusion, I'm going to tell controls are good. What impact will this have on the nature and extent of substantive audit procedure to be performed? Now, without even looking at the options available, tell me if you believe that the controls are good, your substantive procedure will be more or less. Obviously, it is going to be less, correct? So what do? Less importance can be placed on the written representation from the management. Wrong. Written representation will be reliable because internal controls are good. Greater use of test of details and less use of analytical procedures. Wrong. Test of details will be less. And AP will be reliable because internal controls are good. Decrease sample size when performing substantive testing. Obviously, yes, because controls are good, we will check less. Correct? Increase use of evidence from outside. No, when the controls are good, we can believe on the internal evidences also. So the answer will be decrease the sample size when performing the substantive testing. We will do less checking. Okay, then. Next, payroll section of the audit plan of the coastal company includes the following procedures. For each of the procedures, select which is the test of control or substantive. See, one which is going to identify about the control operation, it is test of control. The one which is going to talk about assertion, it is going to be substantive. So recalculate the total of the bank transfer list. Recalculate, that is the assertion accuracy, substantive procedure. Inspect the bank transfer list for evidence of the finance director's signature. Signature is authorization, so test of control. For a sample of employees, agree the salary details in the standing data files to the calculation of the employee's monthly salary as per the payslip. For a sample of employees, agree the salary details in the standing data file to the calculation, so it is substantive. Review the procedure to ensure payroll files and the documents are kept safe and secure. So this is for the control to ensure whether things are all safe and secure. So it is testing of control. Okay, so this is the question, okay, with regard to understanding whether it is test of control or substantive procedure. So if you look at this kind of question, you will understand in a descriptive, when it comes to MCQ kind of questions, obviously, if you read the scenario properly, and you have a basic idea also, okay, about the kind of concept, then looking at the options, you'll be able to decide very easily. It is not going to be complicated, like advantage, disadvantage with a very concept only you understand, correct? Strength, definition, deficiency, one reading you'll be able to understand, okay? So all of it very easy to understand, and sometimes you can actually have a scenario built in your mind, or you can actually prepare a chart in your mind. Okay, this is there, means that could not be available, or that could be missing. This control, if it is not there, that mistake could be there, correct? So you'll be able to pick up very easily. Okay, so that is the kind of question that you can expect in the examination as an objective question when it comes from internal control part. Okay, descriptive will take up in the last session when you're going to talk about some 5 to 6 descriptive questions when we are going to discuss. Then I'll take a question from internal control as well. Moving on further. Okay, so we have now completed the chapter of systems and control. Now the next chapter is very, very easy. We can quickly go through it. It does not take much of our time because it's very easy. Now, internal audit for a broader perspective for you to understand. Why is internal audit done? Okay, see, there are going to be huge entities. Companies are going to be large in size. They're going to have n number of transactions, n number of operations in place. So many controls designed by the management to prevent and detect the misstatements and all. So obviously, you require a separate department altogether, which will add value and improve the organization operations. Okay, that means though the controls are designed, whether they are implemented properly, whether they are operating properly, somebody is required to monitor it. And because of which there is a need for having an internal audit department in the organization, which could oversee all those functions. Okay, so usually larger organizations go in for internal audit department separately, where they will be having internal auditors, which on the regular basis will be having an overcheck of the operations, of the financial statements, or the day-to-day transactions, okay, internal controls which are designed, everything they'll be checking on day-to-day basis. Reason for it, so that management gets a proper detail about whether systems and controls are in place or not. Okay, so that is the need for the internal audit. What is the difference between internal and external audit? Very simple. Internal audit is done for the internal operations, that is to check the internal controls, for telling which areas are deficient and all for the management, and obviously providing the recommendatory measures. External audit does not talk about only internal controls. More focus is given on the financial statement opinion. As a part of checking of the financial statement, we give importance to the internal control checking also. Internal auditors are appointed by the management. External auditors are appointed by the shareholders. Internal auditor's report will be highly confidential, only presented to the management. External auditor's report will be available on the public portal for the shareholders to check it. Okay. Internal audit will talk about the internal controls, and they're not only concerned with financial statement. External audit only will be concerned with what? Financial statements. So every matter connected to financial statement reporting. Okay. Now, what are the key activities of the internal audit function? Basically, why do we have an internal audit function? What will the internal audit function do actually? First of all, they will ensure and evaluate whether entities having a best practice of corporate governance. That means control environment should be really good. That is what they evaluate first. Then they also check whether entities having a good risk assessment process. If you can remember components of internal controls, which we discussed just now, some time back, there we saw you should have a good corporate governance. That means the internal auditors are going to check whether the entity is having a good control system in place, that is control environment. Then whether entity is having good risk assessment process to identify the potential risk and all. Then they will do testing of controls. They will check the assessment, that is the reliability of the financial statement. So on day-to-day basis, transactions recording, initiation, everything, whether controls are operating on it correctly or not. Then assessing the economy, efficiency, and effectiveness, that is value for money, we call it. Okay, that they will check whether all the operations are happening in the most economical, most efficient, and more effective manner. Then whether the entity is complying with all the laws and regulations applicable to them. And also, whenever they come across any kind of deficiency, they have to provide proper recommendations for the prevention and detection of these kind of frauds or misstatements that are there. Okay, so basically, if you look at the internal audit department, these are quite a simple things to understand. So these are all the things which the internal auditor will take into account. Okay. So moving on further. Now, what are the qualities of an effective internal audit function? Okay, what kind of internal audit function does an entity require? Okay, if the internal audit function has to be really effective, then you should have sufficiently resource. You should have, employees who are those people working in the internal audit department who are very well equipped with the knowledge. That is, financially, they should be sound. They should be qualified staff. They should be well organized. They should be independent of the entity. They should be unbiased. That means the chief internal auditor should be appointed by the audit committee because he should be independent. He should not be biased. If he is biased and if he has some kind of, a conflict of interest, then he will not be able to report about the deficiencies appropriately. And if the internal audit department is unable to recommend the measures on timely basis, the very reason for having the internal audit department itself will fail. Got it? Then no operational responsibility. Okay. No operational responsibility means see that they work only in the internal audit department. Don't have a person working in production department as well as an internal audit department. Otherwise, what will happen? If you're going to work in two departments simultaneously, then if there is a problem in the production department, do you think you are going to be independent enough or you'll be unbiased enough to actually report about the deficiency in your department? The answer is no. So because of that, internal auditors, okay, or the internal audit department should have such employees who should not have any other operational responsibility. Okay, then no limitation on the scope of work, give them the complete leverage that they should be able to have ultimate control on whatever area they want to check. Okay, but understand, like everything, this also has a limitation. What is the limitation? See, internal audit department is a part of the organizations, is a part of organization internal control system only. Sometimes it could be outsiders who take care of the internal audit. Otherwise, you will have what? You will also have the employees of the company who are going to be a part of the internal audit department. Now tell me, if employees are preparing the report and if they are going to report about deficiencies, they will be having a fear of losing job. correct? So because of that, it is not a always an ideal thing that, internal audit department, if you have, that means internal controls will be reviewed properly, checked properly, they are always going to be monitored correctly. No. If employees of the company, okay, are going to are going to report something negative, then they will have a fear of losing the job. So because of this, many a times they'll be reluctant of giving appropriate information, okay, because they'll have some kind of conflict of interest here. Then smaller organizations basically do not go in for internal audit function, because what they believe is, or if they go also, what they'll have, internal audit functions and the finance department people will be same only. Because in small organization, the entity size is very small. So they will not have different set of employees in internal audit department separate, okay, or they'll have separate people in the finance department. No. Usually you will have common employees working in both the department, finance department as well as internal audit department. So now tell me, when common people are working in both the departments, if there is a control failure in the finance department, will these people inform? No. Correct? So obviously, when you're going to work in this two different departments, when you have operational responsibility, you will not be able to give proper report. Then you have familiarity threat. Because you're an employee of the organization, or maybe you have served in the organization for almost 10 years, 12 years, you start developing relationship with so many people in the organization. So because of this kind of relationship that you develop, you will have a kind of familiarity threat. You will not be independent. Because of the kind of relationship, coming under the pressure of that kind of relation that you have, you will not be able to report about any kind of failure, control failure, which has been done by your friends around you. Okay. So these are the limitations of the internal audit. Okay. Fear of the employees of losing the job. Small organizations will have common people in two different departments. And then familiarity threat will be because you are as an employee working for n number of years. So there could be a possibility that reporting could be biased. Okay. Then the next part talks about outsourcing, that is internal audit function. A very common understanding, this is very common in many of the companies you see, that usually every company will have inbuilt, or maybe they will have in-house internal audit department. So this specific department that you have, internal audit department, will have internal auditors, and they will take care of, checking regularly about compliance of laws and regulation, whether operations are working effectively or not. Okay, whether laws and regulations have been duly complied with or not. Okay, financial statements are reliable or not. All of this they'll be checking. But usually now we also see that this kind of internal audit function is nowadays outsourced also. Outsourced as in you will give this entire function to be operated by a third party. So in this case, what happens is the entire audit, internal audit, will be performed by a third party. Okay. So third party will take up the internal audit function for the company. Obviously, it has its own advantages and disadvantages. Advantages because they'll be professionally well equipped, they'll have a professional attitude, they'll have their own code of ethics, they will do in a very professional manner. Correct? They'll have proper skilled people taking up this kind of services. Similarly, on the other hand, disadvantage also will be there. Okay, they will be doing it on a limited basis. They will have a time frame scheduled. Okay, once they check, there could be again manipulation done by the entity. Okay, so multiple things could be there. So there could be both advantages and disadvantages. One reading from the material you could do, and you can remember all these points. So that's quite simple. Internal audit function can definitely be outsourced, but it has its own advantages and disadvantages. Correct? Then moving on to the next one, internal audit assignments. Now, internal auditors, what all are the different types of assignments that they can take up? Now, if I talk about a company, let us take any company, A Limited. Now, A Limited is going to have, through its management, an internal audit function or internal audit department which is designed. This internal audit department will have internal auditors. Now, these internal auditors obviously are not concerned only with financial statement, because they're not external auditors only concerned with financial statements. What is the internal auditor's role? They are into different areas. They will check about what? Compliance of laws and regulation. They will also check with what? Whether financial statements have been properly, that means all the documents are properly maintained. Okay, whether controls over reporting has been done correctly or not. So financial statements reporting also they'll be having a concern with. Whether all the internal controls are operating effectively or not. Whether operations have been carried effectively or not. Okay, so all of these are going to be their functions. If there are IT environment, then IT controls whether operating properly or not. Okay, so internal audit department will have a wider range of things to be checked. So their activities will be broader perspective. Now, in this case, what all are the different assignments which the internal auditors will be having? First, compliance of laws and regulation, all of this they will check. So basically, if you look at it, the first kind of assignment that they can take up is value for money. Value for money is basically when they check the operations. Okay, they will see that whether every activity in the organization is affected by 3 E's, whether they are economical, whether they have been performed efficiently, and whether they are in the right direction, that is effectively. So economical means with minimum cost, optimum you have to do the utilization. Okay, minimum resources, efficient means what? More work with limited resources. And what is effectiveness? Your goals and objectives have to be achieved. So first, internal auditors, one of the assignment would be that whether value for money is achieved by the organization or not. That means every operation, every activity which the organization is taking up, are they following value for money approach? That is whether economic has been taken care of, whether it has been efficient, and whether it is effective. Okay, so this is one of the activity that they'll perform. So one of the assignments of the internal auditors. Second, operational audit. Operational audit could be purchase is an operation, sales is an operation, manufacturing is an operation, payroll maintenance is an operation, inventory maintenance, inventory system is an operation. So basically, operational audit says what? Whether all the operations are operating effectively or efficiently or not, all the controls are in place or not, that also will be the assignment taken up by the internal auditors. Then IT system, whether IT, general IT controls, financial IT controls, all of these, whether they're operating, whether they are present, whether they're effectively operating throughout the year or not, that also will be one of their assignments. And I just told you, a part of theirs will also be the financial audit. So whether all the records have been prepared properly or not, monthly statements, quarterly statements, invoicing, recording of data, all of this is happening correctly or not, that also will be one part of their assignments. Okay, so these are the different types of assignments which the internal auditors will take up. Got it? So basically, when you talk about internal audit as a entire topic, first you need to understand why internal audit, because required for checking up on day-to-day basis about laws and regulations, financial reporting, okay, whether systems and controls are in place or not, all the functions are operating effectively or not. For that, you require to have an internal audit department. Large organizations, 100% will have a separate department. Smaller organizations will be cost benefit analysis they will do and decide whether they require internal audit department or not. Internal external audit differences we understood. What the internal audit functions will do, basically the understanding is they look into all the components of the internal control environment is good or not, whether entity is having a good assessment policy, controls are operating or not, financial statement are prepared reliably or not, value for money for operations have been there or not, whether company is able to comply with laws and regulations and all, and obviously they have to give recommendatory measures also. Then what are the qualities of a good internal control system that we know? It has to be organized, well-resourced, good qualified people have to be there. Okay, people should not have responsibility other than that of internal audit function. Okay, the internal chief manager should be independent. Okay, should not be biased. And obviously, we have limitation on the internal audit because employees will have a fear of losing their job. Common people will be working in 2 different departments. Familiarity threat will be there. Obviously, internal audit can also be outsourced, which will have its own advantages and disadvantages. And what are the different assignments which the internal auditor will take? And reporting obviously will be dependent upon how the internal auditors will have a discussion with the management. And based on what is the management's criteria, based on that will be the reporting done. Okay, so that will depend upon the assignment to assignment, the criteria of how reporting will be done. Okay, so this is the basic idea of how the systems and control and the internal audit department works in the organization. Okay, so we have actually covered the entire part. Okay, so that was the second session that we took up today for revision. That was everything regarding internal controls, where we took up in detail regarding systems and control, and then a part of it, how the systems and controls are reviewed, that is about internal audit. Okay, so this is an overview basically, or in a very summarized manner, a very exhaustive topic that we have covered in the main syllabus. When I've given the detailed discussion, or when we have had the detailed discussion of the topic as a whole, that time I've taken a proper understanding of each and every concept in detail. We have gone through line by line. I repeat again, line by line, every point has been picked up and explained in detail with all the illustrations, with all the examples that we have taken through. And we have also done all the practice questions available. Okay, with that learning, if you go through this revision lecture, trust me, 100% coverage and 100% learning will be there. Okay, so with this, we will stop the discussion here. And as I told you, with the sequence of a revision, we have finished with first one, risk, planning and evidence. And today we talk about internal controls, that is internal audit and systems and controls in full. All right.